In the crypto market, there's this constant battle going on, a massive tug-of-war for capital. Money is always sloshing back and forth, and if you know how to read the signs, well, it can tell you pretty much everything about where the market is headed next.
So the big question is always this: Bitcoin versus altcoins. Where's the money flowing? Are investors playing it safe, sticking with the big guy Bitcoin? Or are they feeling a little more adventurous, chasing those bigger returns in the wild world of altcoins? The answer to that question changes everything.
The good news is, we don't have to guess. There's one master signal, a single number that cuts through all the noise. It acts like the market's pulse, showing us exactly where the money is moving in real time. And that signal, of course, is Bitcoin dominance.
Okay, so let's really dive into this. To understand just how powerful this thing is, we've got to get a super clear picture of what this metric actually is and, how it's calculated.
So at its core, it's actually incredibly simple. Bitcoin dominance, or BTC.D as you'll often see it, is just Bitcoin's total market share. That's it. It's the slice of the entire crypto pie that belongs to Bitcoin. Nothing more complicated than that.
And the math behind it? Just as straightforward. You literally just take Bitcoin's total value, its market cap, and you divide it by the market value of all cryptocurrencies combined. What you get is a single percentage, and believe me, it's one of the most watched numbers in this entire space.
But this isn't just a number, it's a force. Here's the best way to think about it. Think of BTC dominance like gravity. When it's strong, everything else falls toward it. When dominance is high, it literally pulls capital away from everything else, and you see the altcoin market either stall out or drop. It really is the market's center of gravity.
So why does this gravity shift? What makes it stronger or weaker? Well, the answer has everything to do with human psychology. The rise and fall of Bitcoin dominance is basically a mirror, reflecting the market's emotional state. It's all about fear and greed. And you can see this pattern play out over and over again throughout crypto history. Just look at 2017. The ICO boom was in full swing, tons of new projects were launching on Ethereum, and money just poured into them, pulling dominance way, way down. But then, the crash of 2018 hits. Fear takes over, and where does everyone run? Back to the perceived safety of Bitcoin. Dominance shoots right back up. We saw the same cycle again in 2021 with the DeFi and NFT craze, a massive appetite for risk that pulled dominance down to new lows.
So here's the crucial point, the thing you really need to get. There's a direct link between this number and how investors are feeling. High dominance, that equals fear. It's a risk-off environment where everyone wants the relative safety of Bitcoin. Low dominance, that's euphoria. It's a risk-on party where capital is flowing into altcoins, hunting for those explosive, life-changing gains. It's basically the market's fear and greed index, but all on one simple chart.
Now, this is where it gets really fun. Let's see how all of this leads to one of the most exciting and profitable times in crypto, the legendary altcoin season.
You've probably heard the term altcoin season. Is that magical time where it feels like every single altcoin is just soaring, posting gains that make Bitcoin's performance look, well, kind of boring. But this isn't random. It's a direct result of money rotating out of Bitcoin and into these smaller projects, and it's all signaled by, you guessed it, a falling BTC dominance.
And when you look at it visually, the shift is just dramatic. The market goes from a state where Bitcoin is clearly king, commanding the lion's share of all the money, to one where altcoins as a group actually control the majority of the market. That's the moment the entire dynamic of the market just flips on its head.
And for traders and analysts, there's a very clear line in the sand they watch. Historically, when Bitcoin dominance makes a decisive drop below that 50% mark, it has been an incredibly powerful sign that a major altcoin season is either already happening or it's about to kick off in a big way. It's the trigger everyone is waiting for.
So, what do we do with all this? How can we actually put this together into a strategy that makes sense? It starts by understanding that this isn't just data, it's a roadmap.
All right, let's wrap this all up. The key takeaway is this. Think of Bitcoin dominance as your sentiment gauge. When it's high, it's signaling fear and a flight to safety. When it's low, it's signaling euphoria and a hunt for risk. So by tracking its trend, you're not just watching a boring chart go up and down. You are literally mapping the flow of capital and figuring out which part of the market cycle we're in. Ultimately, it really just boils down to this. In a market that is driven by these huge cycles of fear and greed, Bitcoin dominance is the clearest compass we have. It tells us where the smart money is moving, and it gives us a pretty good idea of where it might be going next. So remember, follow dominance and you'll follow the money.